Hi everyone, welcome to today's webinar highlighting women in Web3 and the opportunities at the intersection of fintech and blockchain. I'm Sophia Zhao. I'm a partner on the Blockchain Fund, AI Fund, and Women's Fund here at Alumni Ventures. Before we get started, this presentation is for informational purposes only, and it's not an offer to buy or sell securities, which are only made pursuant to the formal offering document for the fund. Please review important disclosures in the material provided for the webinar, which you can access at www.av-funds.com/disclosures. Please note, you'll be on mute the entire presentation, and this webinar will be shared after the event. We encourage you to submit questions throughout the webinar, and please enter them in the GoToWebinar control panel and click Submit. So our agenda today is quite simple. We'll do a quick intro of Alumni Ventures and our blockchain and fintech fund, and we'll dive into our discussion today with three esteemed women leaders from Coinbase, Bitwise, and Women in Digital Asset Forum. And we'll try to weave in any pre-submitted questions in our conversation and answer additional questions if we have time towards the end of our event today. So let's talk about Alumni Ventures. Last year, CB Insight named us one of the top 20 VCs in North America, and we've been ranked among the most active VC firms by PitchBook for 2 consecutive years. We're founded in 2014, and we're a distinctive VC firm where we democratize venture capital to retail investors. To date, we've raised over $1.4 billion in capital and built a portfolio of more than 1,500 companies and fostered a network of over 10,000 LPs and over 600 members from top university and Ivy League schools. So let's talk about our blockchain and fintech fund real quick. We deploy capital to 15 to 20 deals per vintage over the 12 to 18 months period. They're all diversified by stage, region, and lead syndicate. What's unique about us is we co-invest with established venture capitalists with sector expertise, so we leverage their due diligence and term sheets while running our own disciplined due diligence process. And currently, Fund 5 is open to accredited investors. On the next slide, you'll see a few established Web3 VCs that we co-invested with, including A16Z, Lightspeed, Coinbase, Pantera. And most recently, we've co-invested with Blockchain Capital in Blue Sky, the new social app that's taking the world by the storm. On the next slide, you'll see a few established fintech TradFi VCs that we've co-invested with, including Sequoia, Acru, Khosla Ventures, and Google Ventures. Okay, without further ado, let's dive into what really brought us all here today. We're so honored to invite 3 esteemed women leaders to join us on this very exciting and topical topic of fintech and blockchain. Would our panelists please join us on our virtual stage? Please welcome Ms. Lauren Abenschein, Global Head of Institutional Sales at Coinbase, Ms. Lynn Marler, co-founder of Women in Digital Assets Forum, and Ms. Catherine Dowling, General Counsel and Chief Compliance Officer of Bitwise Asset Management. So great to have you here. Love highlighting women in crypto. There's so much incredible work that we're doing in advancing this nascent space. Starting off, would you please introduce yourselves? Please take your time as we'd love to get to know you. Can we start with Lauren, followed by Lynn, and then end with Catherine?
Sure, thanks so much for having me. I'm Lauren Abenschein. I look after the institutional sales and account management team at Coinbase. Coinbase Institutional is a leading provider of custody, prime brokerage, derivatives, and trading services, along with crypto-first services like our Web3 wallet to a large variety of institutional clients. That includes corporates, high net worths and family offices, leading hedge funds and asset managers, and again, a wide variety of institutional participants. I've been at the firm for the last 6.5 years, and before that had a career in prime brokerage.
Welcome, thank you. Lynn?
Yes, hi, thanks for inviting me. I am a TradFi turned DeFi. I spent over 30 years in traditional finance. My last job was at Bank of New York Mellon, where I ran the asset managers, hedge funds, private equity, all what they call non-bank financials. And I left, went down the blockchain in 2017, left to do a startup, which unfortunately didn't make it because of COVID. And since then, I've been involved in a number of I advised to a couple funds. I've also involved in a couple mergers for trust companies, custody businesses, brokers, et cetera. And I started Women in Digital Assets really with the idea of giving back. I didn't get a lot of support in my industry early on. And right now I try to just get women on stage, get their voices heard, and also help them to the next chapter, whatever that chapter is. So we do events around the globe, and we do smaller symposiums in various cities around the country. So thank you for joining me.
Excellent.
Hi, everyone. Oh, sorry, Sophia. Pleasure to be here. I am Catherine Dowling, and I am on the executive management team at Bitwise Asset Management, and I also am the general counsel and chief compliance officer. I've also taken on a lot of the policy and government affairs that seems to go hand in hand these days with crypto. So that's been particularly interesting. And then last year, an additional project that I led was we did 2 acquisitions in Europe. So it's been very interesting over the past year with the issuances of new groundbreaking products, and also looking at some acquisitions in the space for scale and global reach. So excited to talk to you guys here today.
Well, wonderful. Thank you very much. Let's dive into our discussion. So for our audience who may be following the news, you may know that Bitwise is a leading crypto investment firm and ETF issuer, and Coinbase is a leading cryptocurrency exchange and also the custodian for almost all of the crypto ETFs. So maybe kicking off, would our panelists please share how you are working on projects involving stablecoins or ETFs or other interesting crypto projects? In no particular order, feel free to join in anytime.
Well, I can jump in since I mentioned a product that we issued. Bitwise issued was one of the first issuers of the spot Bitcoin ETF, or ETP, exchange traded products. And it is in fact custodied with Coinbase. So we worked very closely with Lauren, and we've spoken on panels before explaining how this particular product works and the mechanics. And equally as interesting as how the mechanics work of this product is the history of how we got it launched, because it was really, for us, it was about a 6-year project, and people who came before us and tried to work on it, the Winklevoss twins, were working on it even before then. So it was a very long road to get this product issued, despite the fact that there were a number of other countries that already had ETFs that held Bitcoin, the physical Bitcoin. I know that sounds funny to say physical Bitcoin since it's not physical, but it's actually to distinguish it from funds that hold futures in these products, which is really a paper asset. So distinguishing between the security. So it was working hand in hand with the SEC, partially on education of how the product would work, and really trying to get the SEC comfortable with the main aspect that they're looking at, which is this going to cause fraud and manipulation on the market? So how do we get them comfortable with being able to say yes to this product in light of the potential for fraud and deceit in the marketplace? So that's a very high level statement that involved years of research and work done around trading in the US, offshores, et cetera, to really kind of prove up that point. And it was kind of a back and forth, almost Wimbledon style interaction with the regulator about getting to yes. And ultimately, not to plot spoil, but ultimately it really took the action of a court to make this happen, because we really couldn't quite get them to the goalpost, largely because it kept moving slightly as we would approach it, a bit of a radioactive half-life. But there's a bigger story there about the lawsuit that kind of pushed this over the goal line. And anyway, that's the story of kind of the first of the groundbreaking spot Bitcoin ETFs, and ETH was to follow. But I'll let Lauren and Lynn pipe in with some additional thoughts.
Yeah, I have to indulge a little bit listening to you tell that story, Catherine. I'm thinking back to onboarding Bitwise. back in, I think like the first month of 2019, Coinbase had launched custody in 2018. And I remember spending months with the Bitwise team rigorously going over every last piece of how custody worked, how we think about legal and compliance, like the diligence was inside and out. And I think that really speaks to, you know, what it takes to launch great products in this space and to have the kind of team that can bring a product from, you know, really like the challenging custody of a digital bearer asset, you know, and a product based on that all the way to what we have today, which is this phenomenally successful, you know, product in market that's welcoming new audiences who, you know, can now hold this, you know, hold and access crypto assets in a traditional wrapper. But it takes that tenacity, you know, to really get through it all. And I think it's just really cool to reflect on that. You know, Coinbase, of course, you know, has been in the space providing custody and check the box, you know, serving as custodian, Sophia, as you referenced, for the vast majority of ETF issuers, you know, which is something we're really proud of because it put our, you know, all that we were building to be that compliant, you know, secure provider at scale with all of the capabilities required of these sort of robust products to the test. And of course, it has been a highly successful first year for crypto ETFs. We also have a large footprint internationally, and as Catherine referenced, you know, we've seen these products succeed in quite a number of markets internationally, and I think that's been quite exciting to see as well.
Well, and I don't have much to add. I worked on a project for an asset manager who just issue an ETF or ETP. And because of my background, I actually reached out to like folks at Fidelity and Franklin and other institutions to try to give me some guidance. And I guess the best guidance I got was, you know, get very friendly with the SEC and work with them. Like really, I don't know who said ping pong, but, you know, it's really making sure that every step of the way you are in discussions with them and they are evaluating what you're doing. The company that I worked with chose not to issue. They probably regret that today, but in any event.
But Lynn, that actually goes to the point of how hard it is, right? Like all the steps that like Lauren and Catherine had to take to get one product out. You know, the old statement that, you know, Ginger Rogers had to do everything Fred Astaire did, but backwards and in high heels. It feels like crypto is the ginger in this situation to TradFi. It's just so much harder to get everything done and the hoops you have to go through and the bells and whistles. And that's actually why it would gall me when I would go to Senate or House hearings and listen to some folks report that this industry was trying to get around compliance. I was a federal prosecutor for over a decade, and I was never trying to get out of compliance. But there is always the aspect of trying to understand what that path is that is being provided for us to follow. And that's where it got gray, because there was this kind of back and forth with the SEC at that stage, and we're now in a kind of a post-Gensler era that was saying, hey, all the law is here. We just need you to follow it. And it was a huge disconnect because there were areas where you just couldn't. It just didn't fit the definitions, and you couldn't actually fill in certain aspects of those forms because of the way these products worked, not because they weren't trying to be compliant, just because you needed new forms, you needed new guidance, you needed new regulations, or at least shaped regulations. And there were many at the SEC that did know that and realize that, but there were many who didn't, and it became a bit of a political battle, which is silly. Like crypto shouldn't have to be political at all. It should be equal for kind of both sides of the aisle. But I like to think that we're entering a new era where we are trying to get to that point, and that there will be more collaboration. We have heads of both the CFTC and the SEC who were speaking to that for years prior to coming into those positions. So looking forward to seeing some new energy and a more collaborative front. And since I'm talking to women here as well, and with a panel of women, you know, we have Carolyn Pham, who is head of the CFTC now, who was always espousing collaboration. And then Commissioner Peirce actually turned down the role of acting head, but she is going to be the kind of main person who's running the crypto task force, because she has spent a lot of her last few years getting incredibly knowledgeable in the space and actually providing. She's one to always say, oh, you guys are the experts, but then when she speaks, you realize too, you're the expert too. She knows a lot, and she's been very helpful to the space and is just kind of a rational, analytical thinker, which is what we need.
Yeah. And one last thing I wanted to say was that, you know, because I come from a TradFi, people in TradFi reach out to me, and I look at things like Coinbase and Bitwise, and I think, you know, I don't want to say there are no free thinkers in traditional finance, but, you know, it's hard for them to go outside their box and embrace it. And so when you see some of the larger firms like the BlackRock and the Fidelity and others who've actually done it, it's pretty stunning to, you know, having worked with a company that just couldn't get it over the finish line. I think companies that are maybe younger or, you know, have this in their DNA, it's much easier. To embrace, everybody embraces it. You know, there's a lot of naysayers in sort of the traditional finance area. That's what I found.
No, that is spot on, because we at Bitwise, we spent a lot of time talking to institutional investors, RAs, financial advisors, and you know, sometimes you'll get to the shop and they'll say, oh, well, you got to talk to Joe or Susie. They're our crypto person. Like, what do you mean they're your crypto person? Can you imagine saying, like, talk to Lynn, she's our securities person, she's our equity person, and like just totally restricting that silo to one person? It's a little bit ridiculous, but that's expanding, and those ranks are expanding, and we've seen that kind of family grow inside these different institutional investors. So it's good to see, and the level of understanding is growing, and the understanding of digital assets as a diversification tool is also expanding.
Yeah, well, I think we're preempted the next question, because, you know, looking back, the past few years there's a lot of regulatory challenges. I've been in the space since 2017-18, so I think similar to everyone here. And I just remember there's always a lot of lawsuits and restriction under the Gensler era, and now he's back to MIT. So now the new administration is definitely taking a more favorable approach, and congratulations to Bitwise that you got fast-tracked for your new Bitcoin and Ethereum ETF by the SEC. So I guess the next question is, can you roughly comment on, like, what is the institutional adoption general in the past and present? Because I know, Lauren, you've worked with corporates, family offices, hedge funds, and I was working at Huobi US and Crypto.com, so I definitely saw some of adoption in the past. But how is it like from your lens, and how do you predict how Web3 will play more of a role in the institutional journey going forward?
Yeah, I think we're sitting at a really important time, you know, around adoption. You know, the approval of ETFs nearly a year ago here in the U.S. Was, of course, a really critical moment. In part for the reasons I referenced earlier. It allows a broader swath of individuals to access, and institutions as well, to access crypto in a familiar wrapper. But it also brings crypto back up, you know, to the attention, you know, of a broader population. And I think that's exciting, you know, not just for these products themselves, but also for, you know, the chance for folks to re-engage with crypto. And I think, you know, something that that can get lost in this conversation is the importance of utility in all of this. So we see, for example, corporates re-engaging on the payments front. If we talk about stable coins, you know, the stablecoin transaction volumes last year were over 30 trillion. And that's 3x what happened in 2023. And so when you start to see real tools, real utility increasing, and these, you know, these sort of engagements, you know, higher profile, you know, corporates thinking about how best to use these tools, I think that's a really important moment as well. So you think about increasing access, increasing utility, And then, the ways in which, the sophistication and available tools are increasing for an ever broadening institutional audience. So there's a lot of things pointing to that, ease of adoption continuing to increase.
I was going to add just a couple of things. I often get asked by corporations, do I put this volatile asset sort of on the balance sheet? Do I do I use a stable coin instead? And I've sort of helped some companies navigate through that process of holding a stable coin on their balance sheet versus, some crypto, right? Which makes them feel more comfortable. The other thing that I find I'm kind of shocked at times because we have these ETFs, ETPs, we're starting to really build on that. But where are the banks that will actually let me deposit crypto? There are not. As an individual, if you want to pay me in crypto, that's a very challenging exercise, right? You can get paid in crypto, but it must be exchanged very quickly, either for a stable coin or fiat currency. I think so we have a long way to go, I think, for this mass adoption, because institutions are getting there slowly, but I don't see that many retail clients. I've just started speaking to retail clients, and they really don't know how to, take an actual deposit. And I'm not talking about a wallet, I'm saying in a bank, right? I want to convert this to cash, my cash fiat.
Got it. Great. Thank you, Lynn. Sorry, I thought you were cut off for a second. Okay, great. I think let's talk about stable coins. Can we go back to the stablecoin slides before we dive further? So let's do a quick stablecoin 101 for our audience. So stablecoin essentially is a type of cryptocurrency designed to keep its value stable. So unlike other cryptocurrency that can be very volatile, think Bitcoin, Ethereum, stablecoins can be pegged or tied to that of another currency, commodity, or financial instruments, and therefore remain a stable price. They're very popular because they combine the benefit of cryptocurrency, which are speed, transparency, and global reach, with the reliability of a stable value. So the total market cap for stablecoin, I think this might be a bit of an outdated stat, and as Laura mentioned, it's huge. It reflects the aggregate value of all the stablecoins currently in circulation, and it's very significant. In a few state of and prediction article by A16Z, stablecoin has been featured as the killer app of crypto. From your perspective, what do you feel is the core utility of stablecoin in their broader financial ecosystem?
I think I just said some of that, meaning that I think a lot of corporations are saying, I'm not going to hold this crypto asset class on my balance sheet. It's way too volatile, but I will hold a stable coin. It feels more comfortable, right? I can't, it's a one-to-one relationship with, say, a fiat currency. That's what I've heard in the institutional corporation side, looking at it that way. I think that we're going to see a lot more adoption of stable coins and maybe a lot more stable coins out there, right?
I think stable coins are kind of like, to use a bad analogy, but the kind of the gateway drug into crypto. It's something that people can understand a little more easily than maybe they could some of the more complex aspects of the digital assets. So people get it, and they do like the notion of it being backed. They're, depending on the type of stable coin, they're backed in different ways. But the typical and the majority being one-to-one backed is appealing, and it's, they don't have borders. There's the speed, the efficiency. They are kind of the universal donor in terms of speaking the language of other digital assets. You come in and out of other digital assets via stablecoin. And part of that evolution is because of something Lynn alluded to, which is that banks have really been kept out of the play with digital assets because of the regulatory landscape in the US. Initially, it was kind of a behind the scenes, let's try to make sure that banks don't touch this. And how do we go about doing that? Well, we are doing it by making it really expensive for them to do it with what's known as SAB 121, which was kind of a 2-year battle in Congress to get rid of it, which had more drama than any staff accounting bulletin I think ever has had prior to this, hearings and debates and whatnot. And then Biden famously kind of went with the veto after it had gotten through, because it made sense to get rid of it, because it was never passed in the right form, didn't go through the right process, and frankly just didn't make a lot of sense, and made banks treat crypto unlike the way they had to treat any other asset ever. So for all those reasons, it makes sense. It actually was one of the first things to go when the new administration took over, and now we have SAB 122. So it'll be interesting to see how that prior devolution becomes an evolution now that we have the ability for a more kind of crypto positive approach to touching some of these financial institutions. So we'll see. Doesn't mean stablecoins go away. They have a role, and they have a tremendous role. And again, they're relatable. They're easier to understand for folks. And we should have already had some legislation on this. It's kind of been stop, start because of some of the unnecessary politics that I talked about earlier. But I expect to see in 2025 that we'll get that'll be kind of a good on-ramp to get the stablecoin legislation going and finally over the line. We don't need to get into the technicalities of it, but there are some kind of back and forth on federal versus states rights with regard to stablecoin. But I think those will be hashed out in Congress, and we'll see that soon, which will, Lynn, make it even easier for institutions to get involved. Because as soon as they have that, it'll be kind of like a sigh of relief. We can touch this and not worry about it as much as if we're getting into dicey terrain.
Yeah, I think the reality is there's a really strong value prop with stablecoins. They are easy to use. They offer faster, instant settlement, and seamless movement across institutions, across borders. And so it's a really important innovation that I think has been recognized, Catherine, to your point, broadly as such. But there are some challenges of adoption, lack of regulatory clarity in many instances, integration into existing systems. I think we, certainly hear from corporates, and we've actually posted publicly some examples of, large corporates working to, pay each other using stablecoins. But one of the linchpins there is getting this capability integrated into existing systems, for example, ERPs. And so I think as we see that sort of interest and recognition, it's the building out and integration that's really going to enable stablecoins to increase adoption even further. And I think that's a sort of bright future.
I also see a really bright future in, Lauren, you mentioned it, both of you mentioned, using stablecoins sort of as cross-border payments. I mean, if you've ever been involved in a cross-border transaction, you at some points, following the money is not as easy as it sounds in the old traditional systems that most of the banks have, most of the larger institutions. Stablecoins actually instantaneous, right? All of the features that make it so easy to move across, different currencies, across countries, across, all kinds of barriers that exist today. So that's terrific. And, I think there's an opportunity to free up some liquidity as well in the process of that, right? That where a lot of companies are seeing. And it's really just getting those on and off ramps, helping companies do that. But that interoperability for the traditional financial institutions, it's a stretch. It's a brand new, I equate it to like a new highway that, your car doesn't drive on this highway, right? That's the data that they're trying to move along with currency doesn't move in the same way. So they have to kind of build a new infrastructure, and that interoperability comes at a price. So a lot of the traditional banks look at it and say, is it worth it? I got 3 clients who want to do this. So, as we grow in adoption, you'll see the banks falling, into place, I guess is the way to, the domino effect happening.
Gotcha. Well, there's also a growing number of stablecoins entering the market. We see PayPal's PYUSD, Athena's USDE, which that's a algorithmically backed stablecoin. There's Ondo's USDY, there's Ripple's RLUSD. So there's a lot of stablecoins out there. How do you view the need for this diversity? Is there a risk of market fragmentation, or is this a signal for healthy innovation?
I think healthy innovation. I mean, will they all survive? Probably not. But neither did Garden.com that I took public years ago, right? But like that was part of the chain, right? Like towards moving in an financially innovative direction. So I think it's all a good sign, and then you'll figure out what's sticky and what isn't a great use case for it. Again, as long as they're safe in how they operate, then it's just a business decision. And does this work? Do they shut it down? Do they continue? If you think of all the offshoots that our kind of internet technology companies started to do during their acquisitive phase, think about what worked and what didn't work, right? So lots of stuff.
Yeah, and I also think that there are, I don't know if you want to call them industry specific, but function specific. So I look at PayPal and I think, well, PayPal is really designed for a smaller business, right? If I have a small business, I'm probably going to want to get paid through PayPal. So using that stablecoin has a lot of merit. If I'm a large institution, John Deere, some big company, I'm probably going to not use PayPal, right, as a stable coin, because that's not sort of the environment, the business that my bankers, et cetera. So I'm probably going to use a larger institution, whether that's a Circle or whether that's a financial institution. So I think there will be categories in a sense of who's the strongest in that category, right, in this sector that you're trying to reach. That's how I see it. I'm not sure if that's correct, but that's how I see it.
Great, awesome. So let's switch gears and talk about ETFs. The question to our panelists is, what are you noticing in the realm of crypto ETFs? I mean, there's the talk of a potential Solana ETF and even a Dogecoin ETF. So how do you feel the investor demand for crypto ETF has evolved in recent years? I mean, we see on the news there's massive inflows and outflows, and it's quite volatile. Could you make some general comments on your observation in the realm of crypto ETFs?
Well, I can jump in. I mean, right now we have the Bitcoin and we have ETH, and potentially coming soon is that combination. Then there's okay, when do we get the ETFs with beyond Bitcoin and beyond ETH? And that is a bigger jump for the regulator because of what I mentioned earlier, some of that back and forth, that Wimbledon back and forth between the regulator and the issuers over making sure that the SEC could get comfortable both on the trading and market side with regard to the fraud and manipulation, and on another division within the SEC Corp Fin with regard to disclosures being made in another type of regulatory document that's required for these issuances. They're kind of different tests for different digital assets, because with Bitcoin and ETH, there were already futures that I mentioned earlier that were on the market that were trading that could be pointed to support some of these arguments that were being made. We don't have that in the US for some of these other assets yet. So then the question becomes, how do you support those arguments that we were able to support using these futures instruments? So it becomes making a different argument and getting them comfortable. So that's why there's the kind of Bitcoin and ETH versus all the other digital assets. And another added complexity for the other digital assets getting out there in ETFs is the fact of some ongoing litigation that has labeled some of these other digital assets as potential securities. And if they're securities, then this isn't the right paper to bring them out as financial instruments. So that you kind of have a cognitive dissonance there in terms of what you can do. So you almost have to resolve one side of it or get to some mediated zone in order to get these other assets out there. And there are some areas where you can kind of put a little bit of both in and mix and match that may work, but it's hard to say right now what will work. And to boot, we're in the middle of this administration change. So the SEC is in a bit of a kind of a purgatory state with regard to being able to, fully make decisions. Kind of like they're being fast in some areas with crypto task force, but they also have these outstanding litigations, which they can't be saying one thing over here and another thing on the other side of their mouth. So that's something that has to be kind of fixed before that happens.
I think from an investor perspective, we see these products in other markets. There's demand for, altcoins and assets besides Bitcoin and Ethereum that you see, specifically channeled towards ETFs in other markets. And I think that, we can expect to see that appetite here as well in the US. And, it is important to be able to offer these assets in different wrappers, and the ETFs is a really, really important one. So, I think that's a big part of the story. And to Catherine's point, finding the right pathway towards education, information, ensuring that that we, are fully buttoned up here is critical. But in terms of, investor demand and appetite, I think you just need to look, ex-US at some of these offerings, and I think that's there.
I'm just going to repeat what you all said. When they first came out with the ETF, they were calling it, and I'm thinking, okay, so this is an index of these altcoins. It's really an ETP, right? I mean, it's just one product. And I think what I'm looking to see is something just like that, this exchange traded product that has more of the altcoins in it. But of course, the regulatory environment is going to take quite some time, I think. But I think that's certainly in the future.
Yeah, and the fun little technical differential between ETP and ETF is that the ETF is really more of a 1940 Act construct, where you have an independent board, a different set of requirements with regard to transparency and audit, et cetera. So, and then you have ETP that has these types of products that aren't coming out on under the 1940 Act. They're coming out under the 1933 Act, commodity-based shares.